Hello, ladies and gentlemen. Greg McCloskey from ForexLive.com. Gold prices are getting hammered and trading here today, down over 3% currently at the moment, and one of the worst trading days of the year. There's talks of a peace or a ceasefire between Israel and Lebanon, which is helping from a geopolitical perspective. 5 days up last week, now leading to a big sharp day down today. There's still room to roam to increase the bearish bias. I'll talk about in this video from a technical perspective, so let's get started. I'll start by taking a look at the daily chart, and the big sharp move to the downside here rivals this big sharp move to the downside early in November. That move early in November moved down around 3.08% or thereabouts, and then trading here today, the price is currently down around 3.03%, $82 to be exact. To the downside, trading at $2,633. Now, that move to the downside that we saw right here had the price moving down further, and with a momentum move all the way, taking the price all the way down to the 100-day moving average. That 100-day moving average held support and has led to this move to the upside. In fact, in trading last week, every day of the week moved higher for the price of gold. The 100-day moving average currently comes in at $2,562.98, and that's going to be a key target on the downside for this the commodity going forward. So we are still about 60 or so pips or dollars away from that key level, so there is room to roam. But over time, if the sellers remain more in control, then that would be the target on the downside for the price of gold. So what would keep the sellers in control? To find out about that, I'm going to have to take a look at the hourly chart. And when I look at the hourly chart for the price of gold, the price fell below its 100-hour moving average. Of note is that earlier today, on the move to the downside, the price came down to that 100-hour moving average. And what do? We found support buyers against that level, forcing the price back to the upside. But since then, after peaking up here near the $2,687 or so dollar level, the price rotated to the downside, broke below that 100-hour moving average of $2,662.98, and increased the bearish bias to the downside. This 100-hour moving average is needed to, the price is needed to stay below that level to keep the bears and the sellers in play, keep them happy. If we move back above that 100-hour moving average, especially after holding it earlier today, that would be a big disappointment for the sellers looking for momentum to the downside, for a unwinding of the bullishness that we've seen in gold, or more unwinding and more downside probing. Now, on the downside, there is work to do, and one is get below the 50% retracement. That level comes in at $2,628, and then get below the 200-day or 200-hour moving average. That comes in at $2,623.06. If we get below that level, it opens the door for the 61.8% retracement. And then we look down toward that 100-day moving average, which currently is at $2,562.67 and moving higher. Remember that 100-day moving average was down here in trading not last week, but the week before, and it holds support. That moving average is moving higher, hence the higher level right here. But that is the target on the downside. This is the risk level up here at the 100-hour moving average. Closer risk comes at the 38.2% retracement, so keep that level in mind as well. That's my look at gold. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.